Welcome to this MCB Roundtable on Trade in Africa. Africa's untapped potential is right up there with the most popular economic topics of discussion. But it keeps coming back because, the potential remains largely untapped. Now, in a report published recently, MCB, whose growing interest in the continent is now well documented and established, earning it the Banker's Bank of the Year for Africa in 2024. The Mauritian Bank says that Africa's true potential lies in trading with itself. While this is not groundbreaking, what makes the report compelling is its pragmatic assessment of what it would take to unleash this potential. And this speaks to MCB's intimate knowledge of the continent, obviously to the extent that one can know such a complex continent. So this is what we'll be discussing today with the report's lead authors, Jessen Coolen and Arnaud Levasseur. Jessen is the economic research lead at MCB's Strategy, Research and Development. He analyzes trends and complex data to help the bank make informed decisions in this rapidly evolving financial landscape. So his contribution today will mainly focus on this aspect. Arnaud is the Executive Vice President, Global Transaction Banking, Global Trade Solutions at MCB, and he's an expert in trade finance. When he's not structuring trade, he is discussing it in international forums and has become a champion of trade solutions adapted to the continent. Gentlemen, thank you very much for being with us. But before we delve into the report, can we just talk about the reason for it? Arnaud, let me start with you. Why is this report important and what brought it on?
The report it was a discussion between me and Jessen last year, where during the trade week, we went to business schools and presented Africa, the trade finance sphere. And this is where we realized that the audience had a very high perceived risk of Africa. Mm-hmm. And even though they thought there is potential, but for them it was high risk and they were not thinking about intra-African trade. And then we were discussing, me and Jessen, and said, but this is not true, because when you realize it, 18% of the world population is African, yet Africa contributes to only 3 to 4% of world trade. So we are definitely not in our league. And I told him, we need to try to do something to show them the trends, the rising consumption ahead, and how we can promote African trade. And by doing so, we honestly believe that helping Africa to trade will help it to grow, to help it to go to higher prosperity levels, and in this case, help our African brothers and sisters.
Right. And Jessen, you deal with data. So what information does this report contain that you would like to make people stop and think?
I think the report contains a number of actionable insights that policymakers, private sector, financial institutions, and even investors can look up to be able to, get a sense of how to promote intra-African trade, which is extremely important in today's days. We all hear about the disruptive times in which we are with the intensification of trade tensions. So the report contains a number of case studies, what is working, because we hear a lot about what's not working in Africa, unfortunately. But the report sort of gives a sort of color also about what could work and what is working.
Okay. So basically that report, harnessing Africa's trade potential, strategies for growth, is largely based on insights during last year's MCB's Africa Trade Week, right? This is an annual event that brings together stakeholders from the business community and institutions from various African countries. So one of the key findings of this report is that Africa's trade landscape remains largely untapped, right? With intra-African trade accounting for 16% of the continent's total trade. So my question is this: when it costs less to ship a container from China to Mombasa in Kenya than it does to transport a container from Mombasa to Kampala in Uganda, it kind of makes sense to import from China, right? But Can we get into the whys and the wherefores of this situation? Why is Africa still so unconnected with itself? And why has the continent historically not traded with itself? Jessen, can we have your take on that?
But clearly, the figure of 16% paints a stark picture, right? Especially when you compare this to the 70%, which is intra-European trade, and 60%, which is intra-Asian trade. Now, there are many reasons that explain why still today Africa trades very little with itself. Now, the very first reason goes back to the colonial backdrop of Africa itself, where African economies have been built in such a way that they will be focusing essentially on extraction of primary resources and import mostly all finished goods from the rest of the world. Now, going beyond this colonial aspect, there are still today a number of trade barriers. Let me give you a few examples. It's still very difficult today to move goods seamlessly across the continent because we've got so many borders and so many border controls. Even people, it's difficult for Africans to travel across Africa. Only 28% of intra-African travel can be settled visa-free. Can you imagine, if you can't move people, how can you even move goods?
Yeah.
Other than these, there are still the prevalence of tariffs and non-tariff barriers. I'm talking here about custom duties, heavy bureaucracies that hamper trade patterns. Poor connectivity results in high transport costs. In Africa, 29% of the price of goods goes directly to transport, while it's 7% outside of the continent. And in some landlocked regions in Africa, this transport cost could even go up to 70%. Yeah.
Right.
We all talk about road connectivity also in Africa. Only 53% of roads in Africa are actually paved, when we know that 80% of goods travel in Africa is done by roads. So I know it's all doom and gloom from what I'm saying, but rest assured that there are opportunities. And we truly think that if we combine forces together, and that's the agenda of this report, the idea of collaboration, there's a market of 1.4 billion people,
right,
which offers huge potential.
And I suppose doom and gloom, or what you were saying earlier, Arnaud, about how when people hear of Africa, they think of risk. Do you have anything to add to what?
Yes, definitely. And I concur with what Jessen has said. I think there is this picture that we said, yes, 16%, but I also see how this can grow. And as Jessen rightly pointed out, that this is one of the reasons why we wanted to push this report, because this report is also going to tell you the trends with respect to Africa, how the population is growing, how consumption is going to grow. And this being said, that there will be a demand. And obviously, when there's a demand, there will be supplies. So you mentioned about these costs. Yes, there is. But also, I will say that there is also a lack of awareness of what my neighbor country is doing. Could I buy this product there? Because of information. So what we did recently, last year, is to launch a global trade portal, a platform that provides clients with their HS code of their product to say, can I buy it within the African continent? Or can I sell my product into African continent? And this shows, and how I was giving these information to some clients, but they never thought that, for instance, Namibia was importing a lot of honey. And just imagine that Namibia was buying from Uruguay, but he could buy it
with
here.
a neighbor.
So sometimes we need just some information and to connect the dots. And this is where we believe that there is a lot of potentials. Secondly, is I think we have a role to play. We have this role to play to try to promote trade within Africa.
And that's and the report actually puts a lot of that emphasis on intra as opposed to external trade. Why do we think Africa's true potential lies in trading with itself when others have more money and presumably more needs?
I will break it into two. The first one, yes, we want to promote intra-African trade, because by promoting intra-African trade, we are creating a circular economy within Africa. So there is the wealth is staying within, and we can build on that. However, the second part is also to move up the value chain. And I think what Jessen was saying a bit earlier is about the extractions of resources and just selling it. But what happens if we can process it and then say it at higher value? So these are the cases. We have one. Yesterday I was talking to a client about the aspect that they are building a ship in Mauritius, a luxury for private cruise, a luxury ship, low carbon emission is being built in Mauritius. So this is where Africa is moving up the value chain, because we are not just exporting things, but we are we're creating value. So in this sense, yes, we agree that the external who has money will buy this ship, but let's create the wealth here. And by promoting that, we're promoting against trade. Behind trade, there's people who are working, and then we're lifting up the communities around. Yeah.
Is there anything you
I think I totally agree with what Arnaud has just said. I think the narrative should really shift from dependency to self-sufficiency in Africa. And that goes by promoting local markets. It's time to have more of made in Africa, by Africans, locally produced in Africa. And this is where initiatives like the Continental Free Trade Agreement would be very helpful. So it's really important that I was talking about the trade restrictions that still impede African trade today. It's important that we harmonize these trade policies in the continent to be able to really give a push to trade in the continent.
All right. But at the same time, lack of infrastructure, and you cite this in the report, is a blocker. But you also say that trade demand will drive infrastructure. But at the same time, if the infrastructure is not adequate, demand will lag behind. It's a bit of a case of the chicken and egg. How do we solve this riddle?
You're very right. Actually, infrastructure investment and trade are very linked. But at the same time, they must evolve together. The idea that I have is that we should really push for a virtuous cycle whereby increasing investment in infrastructure triggers higher trade demand. And higher trade demand creates the demand for infrastructure itself. So it's a sort of a two-way traffic. It's easily said, but I agree not easily attained. We all are conscious that there's an infrastructure financing gap of $100 billion annually in Africa. So how do we address this? This is where ideas like public-private partnerships come into play. The role of institutions like ourselves, MCB, to push for that agenda. I was speaking earlier about the Continental Free Trade Agreement that really offers opportunities not only to reduce tariff barriers, but also to create an environment where investment can take place. Of course, today we speak a lot about digital infrastructure, which sort of provides a leeway to reduce the huge cost of physical construction and infrastructure. At the same time, just like airplanes and birds cannot fly in one wing, physical infrastructure itself is not alone. There's also the softer side of things that matter. This is where people infrastructure come into play. We really need to push ahead with educating our people, because it's good to have buildings, railways, etc., but it's really to do with educated people that can drive things forward. So to sum it up, I think the idea is to have an Africa which is more connected, more interconnected. A more connected Africa means a more competitive Africa.
Right.
Yeah, I totally agree, Jason. And then to complement on what you just said is we don't realize it, but I've been traveling to a couple of African countries. When you're on the ground, you can see the dynamics, you can see the entrepreneurs who wants to do things, who wants to buy more. By buying more, they're able to sell more. And they are themselves pushing for infrastructure. But also at the same time I think it's our job as bankers, but also other banks, to push others to say, we need to trade more with Africa.
Right.
And in doing so, this will push these entrepreneurs to have more business and then create more these dynamics, as you mentioned.
I can feel your optimism, but there's a reason why Africa has been in turn called the rising continent and the hopeless continent. And obviously, MCB believes in the rising narrative and has been a part of that rise. But the complexities remain. And you guys, you mentioned that the figures are here. 40% of sub-Saharan Africa is classified as either fragile or conflict affected. 11 coups or attempted coups since 2020. And the fact that 83% of Africa is classified as commodity dependent, etc., etc. The list goes on. So what is, for MCB and its clients, the biggest blocker?
Okay, the biggest blocker is on various fronts. It's, for instance, there will be regulatory. It's one of the major one is foreign currency. There is also sometimes the legal risk aspect. But I will say we see blockers, we understand that there are blockers, we understand that there are risks, but I think it's where what we want to push is push our client to explain to us their supply chain. Who is doing what? Where you're going. You were taking the examples of Mombasa going to Uganda. We need to understand these flows. By understanding who is in it, how we are doing it, we are able to structure and really unlock financing, understanding client, and understanding why this product is being asked, what is being done with this product, how is it being converted. So when we understand the why, we are able to navigate these risks. I'm not saying that there is no risk. Yes, there is. We need to be careful, but there is also opportunities. And there's a lot of opportunities, as I mentioned earlier. I think if you look at the same data and the same comments 30 or 50 years ago would have been bigger. And I give an example. An economist last year was saying about when you look at the news, the negative news on Africa has been reducing drastically, and you have now more positive news. This is where you mentioned Africa is rising. And yes, we are, I think, on the right road, but we need to continue on it and really pushing it.
Yeah, maybe just to complement what Arnaud has said, this African premium, this negative perception of Africa has really historically led to underinvestment in the continent. But perception is not always reality. I'm thinking about a report that I read a couple of months ago. It was made by Moody's Analytics that surveyed 14-year data on the default rates on infrastructure loans. We're talking about infrastructure a minute ago. Guess what? The default rate for Africa was found to be 1.9%.
Right.
North America, was 6.6%. Latin America, 10%. Eastern Europe, 12%. So as Arnaud said, we're not here to say that there are no risks in Africa, but for those who make the effort of understanding the why, the how, and I like this strategy of MCB, which is really focused on niche segments where we build expertise, where we've gleaned information, we can be successful.
Right. Okay.
Maybe if you allow me just to add one more point, and then just came back to me, that ICC did something as well. The ICC Trade Register took a data over 10 years and to see the default rates on trade transactions. And I like to showcase this data, but it's consolidated. So people will always tell me, but let's look at Africa. Because you might say for the world, it's low default rate in trade, but let's look at Africa. When you look at Africa, it's as low as the other countries as well.
That's amazing.
So this is where you see trade transactions is short term. And you rightly said, we are in a niche market. We understand what you're doing. And this is where we're able to really promote African trade.
So there's a good foundation for industrialization, because you do actually, in the report, you distinguish between trade in commodities and trade that gives rise to industrialization. It sounds logical, but can you just tell us more about this and why the latter has more meaning for Africa?
Well, historically, as we said, Africa has been primarily concerned with exports of primary commodities and imports of final manufactured commodities. But this has to change. If you think about the production of cocoa, for example, 65% of cocoa production comes from Africa, and it's mainly Ghana and Cote d'Ivoire. But guess what? Africa gets only 2% of the global value of chocolates, which is $120 billion. But that is, and it's the same thing if you talk about vanilla in Madagascar. 80% of vanilla production globally comes from Madagascar. But then Madagascar gets very little of all the finished goods that are produced out of vanilla. I mean, even the perfume that you're wearing, Deepa, comes probably from vanilla, crafted from Madagascar. Chocolates, I mean, it's all the final goods that are higher value. And this is where I think Africa needs to shift the gear, to change the narrative and move up value chains. Arnaud was saying that earlier. The same thing that applies to agriculture, to commodities, also applies to minerals. We all hear about the urge for energy transition, and Africa is endowed with all these resources. But what is important is that Africa makes the effort to not only focus on providing raw inputs for EVs, for semiconductors, but really build industries, refine products to be able to move up the value chain.
Right.
And if I can compliment on it, I think we also inspire others, because with respect to what we are buying, the African continent, we are looking at it from a sustainability lens. So now we're in the era where you can buy things which are with technology, reduce less consumption on electricity, for instance. So it's two ways. It's also helping by the way we purchase is to buy things that are more sustainable than before.
Right.
So,
yeah. But we're talking about big figures. We're talking about sustainability, but there's really is a problem of trickling down in Africa. So, or the lack of the proceeds of mainly now commodities. What can stakeholders like the MCB, I know it's more to do with public policy, but what can stakeholders like MCB do to help that situation?
I think as the leading player in Mauritius and growingly important player in Africa, MCB is trying to walk the talk in terms of everything that we're doing about sustainability, for example, to integrate local inputs, even in terms of the financing that we provide today. We are very careful in terms of what we are financing. We take the time to assess how much of local input and what sort of impact this is having. A lot of focus is centered also about promoting SMEs, which are the basically the bread and butter of African economies. It's really to do about fostering also this agenda of collaboration. This is where last year's event, the Trade Week event, if I was to the key takeaway from this, the key message that we conveyed was really about partnerships, collaborations that will be critical for this to succeed. Otherwise, we would be sitting here in 10 years talking about Africa's potential over and over again.
So we're basically talking about trade finance, which is MCB's area of expertise in the region. What kind of facilities then, going by what Jessen is saying, can MCB offer its clients?
I would say we've been financing. I think MCB has always been doing trade since the beginning. So Mauritius Commercial Bank. But when we talk about the African continent, so the first thing is we split it into 54 countries. Each country has their own ways of doing things. One of the angle is a lot of on the commodity sides, but also on the oil and gas. To industrialize Africa, you need energy. So we are financing these. We are financing the transitions, as well as a lot of, I would say, renewable energy. And then also with respect to the African trade, which is more on the inputs and processing, what we are doing is understanding the client again, the supply chain of a client, proposing structured trade finance within it to enable clients to buy and to sell, and understanding what they are buying. See, this is where we integrate in our facility the sustainability aspect, but we take sustainability to another level, because sustainability is not only on the E part, but also on the S. And S, we mean social, but I think we should change S to societal, because it's more about the socio-economic development that is bringing. And this is what we are integrating into analysis. What does that mean? That means that from a bank perspective, we have obviously risk framework. We need to be within our risk framework, risk appetite. But what we are pushing our internally is to say that this is a transactions that is sustainable, that is for Africa.
Right.
Let's take a higher risk and also provide the client benefits in terms of pricing, so that influencing the client to do more, because again, it's the right thing to do.
Right. Okay. So here's a hard one for you. Intra-African trade mainly takes place in USD, which is the cause of a lot of issues, right? And also it doesn't really make sense. How do you deal with that problem?
This is a hard news to crack. I agree. But there are a couple of initiatives that are that we're seeing that are quite interesting. Of course, it will take time for things to change, but there are decent moves. I'm thinking about the Pan-African payments and settlement system that has been launched under the Continental Free Trade Agreement, which sort of promotes local currency settlements for African trade. There are also increasingly talks about cryptocurrencies that could be used for financing African trade. But then again, it will take time. It's not going to happen overnight. We've seen the last 2 years, the currency shortages, how much this has impacted African economies. But there are baby steps, I would say, but going in the right direction. We're seeing interesting signals, to say the least.
But has there been a will? I mean, when there were those shortages, has there been a will to find solutions to bypass the USD?
I mean, there's been a lot of talks about it, but then the USD remains a safe currency. I mean, and it's not going to change overnight. I'm not here to say that it's going to shift from 80% to 20% in the space of a few years. It's going to take time, but let's just say that there are other medium that nowadays are being entertained, that are being considered to be able to alleviate this problem. And this is where digitalization comes into play.
Exactly. I think digitalization will play a key role in it. And secondly, yes, I mentioned it earlier, Africa is 54 countries. So 54 countries has their own way, economic and things. So it's not easy to just have to deal with each of them. However, for instance, MCB is now currently dealing in some African currencies. So there could be settlement in some African currencies that we have a systems to do that. And I think the more we invest in technology, the more we're able to see this intra-African trade, and the more it will make sense, obviously, to have no currency. Obviously, USD will be there. We think will be driven more from a demand side, from more trading to push something different.
All right. Well, I'm glad you mentioned the 54 countries, because you also quote a World Bank report that says that harmonizing trade policies could really boost intra-African trade by 52%. And you cite a case in point, trade between Ghana and Nigeria grew by 20% in 2022, just as a result of harmonized trade policies. This is clearly down to political will, right? And is there enough of that?
I would say no, but we're gradually seeing progress on that front. And this is probably the most important thing that has been lacking over the years. Because, of course, Arnaud said it, it's 54 countries, so 54 different lists of priorities and economic agenda. But then if we want this to work, we can't do without strong political commitments. And this is what we're sort of trying to see, already seeing.
Okay.
Yeah.
Yes, I think we need to have a united Africa, where each members from is looking in the same direction, seeing the growth of Africa,
Yes.
and trying to say, in French you say it, un peu deux dans son vin, where we try to manage it and see how we can harmonize the trade policy. I think there's some good things that is being done. For instance, the African Union has a clear agenda, the Africa 2063 agenda, with respect to AfTA, for instance, the free continental trade agreement that is being done. There is some good policies, but we need to have more support, but also the DFI to play, who are already playing a major role, but to already push and create more awareness around private sectors that there's financing. But I think it goes down to what I was saying a bit earlier about awareness and information. Because if you don't know that there is these possibilities or this support, you're not able to tap into it.
For sure.
So,
Maybe just to add, nowadays we hear a lot about the establishment of potential regional corridors.
Yeah.
Earlier I was talking about the extensive number of border controls. Now, these regional corridors would serve as one-stop shops in specific regions of Africa, and therefore alleviate this trouble of having to go from one border to another, which is quite interesting because this has won a lot of political will already.
Right. And what can tiny Mauritius do to help things?
I'm smiling when you say tiny, because in the reports I was saying to Jessen when we were drafting it, I did not see in some of the maps Mauritius.
You don't even see the dot.
You don't see the dot, so it's a nice one. So, but I think Mauritius can play a huge role here, because being small, being tiny, being a company, a country that has to import a lot, being able to export, we were able to now play a major role with South Africa, because we are between Asia and Africa. We are part of Africa. So I think what we need to do is how Mauritius can trade by trading his Mauritius International Financial Center to the African continents, and to ask this continent, you focus on the industrializations. You have a scalability to do it. You can produce more, you can sell more, but let's leverage on Mauritius with respect to the trading part. This is where, for instance, We have a lot of clients that use Mauritius when they are buying from China. Why? Because when you buy from China, you're able to, because Mauritius being investment grade, you're able to get more favorable terms of payment. These favorable terms of payment alleviate the burden from a working capital perspective for the client and also enable it to have cost savings. So that means he's able to buy more. By buying more, he's able to sell more. So this is where I think Mauritius has a major role to play. And I believe we are doing it. We need to promote it more outside and also to really educate and create awareness to our clients how to leverage from Mauritius from an African trade perspective.
Yeah, I think that the model of development of Mauritius is also interesting because earlier on we were talking about Africa remaining focused on commodities. In Mauritius, we've used the proceeds from the exports of sugar at the time and then used these to develop new clusters of growth. This is where we develop the financial services sector, the tourism sector, the textile industry. And we're continuing on this diversification process, which is extremely important to reduce, the risk that you're impacted by any sort of shock, which is very often the case in Africa, which are essentially commodity dependent. Whenever there are price shocks, they're going to be impacted. Yeah.
Okay. So, I'd like to end on something both of you spoke about quite eloquently. So MCB is very clear that it wants its sustainability agenda in Africa to focus on the S in ESG. And obviously trade goes to the very heart of socio-economic development, as you rightly say. How is this parti pris reflected in MCB's trade finance solutions?
It's a very nice one. It's not easy, I would say, first of all, because when we talk about sustainability and we talk about the S, it's not easy to pin down, to track, to have KPIs and to assess. Because today we talk about a lot about social washing, for instance. So it's a bit tricky. It's not easy, but I believe we are having the right reflections and we have integrated into some of our solutions. I can name you, for example, in the report, we talk about the sustainable supply chain that we've done with a well-known company in Mauritius, where within what we did is understanding what you're buying. Is it sustainable? Yes, there is accreditations from well-known organizations about what they're purchasing. Now we want to visit their factories. Are they following a sustainable agenda? Does this company have it? And what are they implementing from an operational process within it? And then obviously, if we go through this process, when it's coming out, can we track?
And MCB tracks all of them?
No, the client tracks it. We can leverage on their system, their technology, the documentation to track. And obviously the products come out as a sustainable product. So this is why we're saying supply chain, because we finance the purchase side and also the selling side. But the second part is how to push that voice outside of MCB. That's something also that we are doing, because we believe, and when we say we, also other African banks, because we are in forums with them, and we all have the same voice, that when we talk about Africa, the S should have a higher weightage than the E in terms of ESG. Because today, the northern part of the world has been very focused on the E. If you look back at where does ESG come from, it comes from the Sustainable Development Goals of the United Nations. There are 17 of them. And yes, there is one for environment and climate, but there's also others for education, for healthcare, for hunger. And so what we are saying is we want to focus the trade to promote against the African continents to lift itself up. So by doing that, we integrate it into our analysis. So we've came up with a sustainable trade products. We're also now pushing to have an intra-African trade products as well. So again, I believe within MCB, which the part that I like with my job is because my various colleagues believe the same thing like me. So it's easier to tap into the door to say, let's do this and promote it, and then come up with the right committees and to promote these solutions to clients. And I think with this report, that's what we are saying.
Right. I think at MCB, we've always been convinced of Africa's potential ever since we started our regional diversification agenda. And this is what we're trying to push further ahead. And really, just to build on what Arnaud has said, we're pushing quite loudly in terms of the voice that Africa should have, and creating awareness about the need for, not for blanket policies, but for really tailored policies to support Africa's growth. Look, it's no surprise to anybody that Africa will be the place to be, Africa is the future. Africa is the place where growth will take place. And all countries on earth will, one way or the other, need Africa with socioeconomic development. So this is the time for Africa to move ahead.
All right. Well, gentlemen, I could spend the day talking to you about this, but all good things come to an end. So I would like to thank you very much. I've thoroughly enjoyed this conversation. Thank you very much.
Thank you.
Thank you, Deborah.
Thank you. Bye-bye.
Thanks.